Now viewers, let's put the focus on another big story that we are tracking this morning, the impact of the conflict in Middle East on the markets. Now the global markets have reacted sharply after the United States joined Israel in striking Iran. Oil prices have surged over 2%, hitting a 5-month high. While Asian shares slipped amid rising uncertainty, investors are now closely watching how Iran responds to the attack on its nuclear facilities. The escalation has injected fresh volatility and into the already tense geopolitical landscape. The markets are, what we are understanding at this point of time, being very fragile. There are reports coming up how the Middle East conflict has created a bit of confusion in the market as well. Arzu Seth is joining me with more updates. Global investors are watching for the next move by Iran. West Asia and the entire Middle East conflict is also keeping the markets in a fix. Arzu, what more are you picking up if we talk about the big shares that continue to reflect upon the situation in the market?
Well, Asian market plunged while oil prices briefing hit 5 months high, and amid the concern of disruption to energy market after the United States joined Israel in attacking Iran's nuclear facilities and escalating the Middle East crisis. In fact, globally, if we see it's tension among investors and also the business persons regarding this, and Iran is the world's ninth biggest oil producing country with an output of about 3.3 million barrels per day. And also, if we talk about the Tehran, the capital city of the Iran, exports almost half of that amount and keep the rest for domestic consumption. And if Tehran decides to retaliate, observers say one of its options would be to seek to close the strategic stream to Hormuz, which carries 1/5 of the global oil output. So all eyes are on the Iran, how they are going to retaliate, because the countries are asking the Iran to rethink about their decisions and also to hold the diplomatic talk with the Israel and the US and not to retaliate in a military actions. So we can clearly see the impact on the oil market. Also, the oil prices were up over 2%, their highest since January. Brent was up relatively restrained 2.7% at $79.12 barrel, while US crude rose to 2.8% to $75.98. So there has been a rise, and in the coming days, it remains to be seen how the US, how the Iran is going to retaliate, because that is going to impact the entire scenario as far as the global market of oil is concerned. Yes, Simran.
Absolutely. In fact, Arzu, thank you very much for being with us on the telecast. Now, we also have a senior economist, Mr. Sharat Kohli. Dr. Sharat Kohli is joining me live on the telecast. Appreciate you joining me this morning, Dr. Sharat Kohli. Now, we are looking at these developments. The oil prices have jumped. Asian markets, they have plunged as the Middle East crisis only escalates. The Asian markets have plunged while oil prices briefly hit the 5-month highs on today amid the concerns of the disruption to the energy markets after the United States joined Israel in attacking Iran's nuclear facilities, escalating the Middle East crisis. Iran is the world's 9th biggest oil producing country with an output of 3.3 million barrels per day. Market participants are expecting more price gains amid mounting fears that Iran may retaliate against the US with the closure of the Strait of Hormuz, which sees around a quarter of global oil trade and 20% of the liquefied natural gas supplies. How do you react to the entire, in fact, instability that the market is also currently underway, as it very cautiously wait for Iran to take on to the next step, as right now things are looking quite unstable?
Good morning, Simran. Good morning to the viewers of Newsx. Also, not a very good morning for the markets. The markets are quite down. The Asian markets across, Singapore, Hang Seng, Nikkei, across Japan, all the markets are down. This is in reaction to the weekend action taken by America on Iran, those 3 nuclear sites. Well, just to put it in retrospect, on Friday the markets were celebrating. The Sensex was up by more than 1,000 points. Nifty was up by more than 300 points because President Trump had said that for 2 weeks he's not going to do anything. I think that turned out to be a bluff. I would say a typical Donald Trump kind of a statement when he immediately overturned what he said. And he did what he did on Sunday, which is yesterday early morning. So the markets obviously are not enjoying this particular action, and because of the crude oil prices, as you rightly said, almost hitting $80 now. The Western Texas Intermediate, which is called the American Crude, is also over $75. This is not very good news especially for the countries which are heavily dependent on crude imports. Well, India, for that matter, 85 to 86% of its crude oil requirements are being imported. $137 billion it was what we paid last year for crude imports. And we must keep in mind that every $10 increase in crude impacts our fiscal deficit to the extent of 30 to 50 basis points. And a sustained increase in crude oil prices impacts inflation, which means our GDP can also be affected by about 30 to 40 basis points. So this is not very good news because it can fuel inflation. The US dollar will become stronger. Rupee will become, lose its value, which means our imports are going to become expensive. So it's not very good news, not just at a macroeconomic level, but also at microeconomic down the line, because at the end of the day, people also suffer as far as their own budgets are concerned, Simran.
All right, Dr. Sharad Kohli, thank you very much for that perspective. Asian markets are definitely in a tense situation while stocks dip. Now, we are on that note with more news and updates on the other side. Stay tuned.
For more such videos, subscribe to the Newsx YouTube channel, hit the bell icon.